What is going on, everybody? And in this video, we are providing you a state of the market and stock picks for July 8th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious, phenomenal, astonishing market that we currently are in. But nonetheless, sarcasm is necessary. Nonetheless, yeah, I know my jokes are bad, but anyway. So in this market, state of the market, what do we got going on currently right now? What is interesting to see is Bullard was on today. He didn't really have much else to say. He was kind of just shielding off questions, kind of just reiterating what we got from the report yesterday. Tomorrow we're going to get non-farms, so that's really what matters. We really want to kind of see what's really going underneath everything. We have oil, which oil seems to be coming down quite a bit. Your dollar started to pull back a little bit today, which is good to see. We don't want those to keep pushing up. So that does help and alleviate some of the potential pressure for the Fed to have to continue to raise rates. Although a good thing to keep in mind here is that they are very willing to front run, like something I've said, they're very willing to front run rates in hopes to make sure that they have a firm grasp on inflation. Again, tooling, be it as it may, isn't going to actually combat inflation, but something I've always stated is stunt growth, because that's what the Fed tool does. It essentially doesn't want companies to be hiring or doing any additional projects. And now this is not a direct thing they're trying to do, but stunting growth will help with inflation. It essentially dilutes demand and brings down demand so that inflation comes down. So in a indirect way, it brings down inflation, or in a negative way, you should say, because ultimately oil prices are what's gauging everything right now. So with all that being said, non-farms matter. Non-farms we're trying to determine if companies are really dialing back on hiring people, if companies are, what we're going to find out here in the next earnings is if companies are cutting, not just what they did in the earnings, because I think during this earnings they can do well. But again, it's something we've kind of seen even through the pandemic, is forward guidance. What does the forward guidance look like? And the market has been moving off of forward guidance, not so much the fact that forward guidance hasn't been great, and a lot of these companies have still been killing it. So that's also something to take note when these companies do exceptionally well, and then they start dying off right after earnings because of forward guidance. And then it dies off for typically has a cycle of like 3 to 4 weeks, and then it turns around and starts running again. Keep doing this cycle for these earnings cycles, and that's pretty much how these cycles have been working. These cycles have been a little bit earlier than later, just because of the window between the Fed meetings has been tight. So you have to kind of squeeze in that pre-earnings run up, and then essentially call it a day, and then repeat the cycle. So with all that being said, tomorrow will be the first key to the puzzle, and then we will have we will get the banks next week. We'll start getting banks next week, I believe, and then we have Tesla on the 20th. Now, this is really going to gauge us on how we're really doing from this point. And then you get the Fed at the back end of the month. So essentially our backstop, just waiting there to get all the data that's going to happen in the next week and the next 2 weeks. So with all that being said, it's an interesting spot. We have to wait and see. The market is looking very strong. The market looked very strong today, which is a good sign. And again, primarily, I think because oil and the dollar was selling off. The yield curves, the 2 and the 5, have been inverting a little bit. There's been signs of a recession, and it also helped that Bullard came out and said that we're not going to have a recession. But you also had Powell just I think it was just last week, was saying that it's potential right now. We're talking about Powell here, who told us that something I believed was that essentially the supply was essentially just transitory, or the inflation was transitory, and that inflation would catch up. And I do believe that would have happened hadn't we not had a war coming right on the back end of essentially the pandemic. I think we were getting to that point where the demand was high because people were coming out of the pandemic. They had a lot of money to spend, right? We hit some very historic levels when people were saving throughout the pandemic. People wanted to spend that money. And it was great for the first couple months of the year until we got in the war. And then we're starting to worry about recession woes and interest rates starting to skyrocket. All the corrections that we should have had over the past 2 years, where we're just going parabolic, are now starting to happen just in 1 year. And so now we are definitely close to, or deadly close, I should say, to a recession. And so right now, again, I think the markets, something I talked about yesterday, but again, I think the market has potential to hit the 40-50 will be the earnings run. I think in this short window of earnings, I think we can potentially run. I think tomorrow could be potentially big. So something I'm really looking at to see how it opens. Again, you have resistance at this 39.83. You also have the trend line. If we can, I think could potentially gap and start running to there. Ultimately, if we can hold there tomorrow and Monday break up over this, I think we could potentially see that 50 float around that 50-point basis move. And then I think that's where we'll sit. We'll sit above this and could potentially chop up here till we get the Fed. And again, if the Fed come in heavy, we'll correct down to 75 if that's what the case, or 100 if that's the case. And then we'll play it by ear from there. Again, one thing big really to consider here too is technical wise, you have to understand the bigger these supports are, the bigger bounces you're going to get, right? So you're talking about the 200 weekly we just bounce off, right? You should get a massive bounce, which we're kind of seeing here. But again, you have to remember on the weekly, we're still within there, right? Like we can still touch that roughly that 4K mark. Again, it's a weekly. You could potentially even still push all the way up through here and then wick straight back down right in is what we've seen a lot of. So don't think we're out of the woods yet. Stuff has to line up this month, I think, to do that. And again, if Fed's going to continue to front run this, you have to be aware that even though this is running, that if they come in at 75, in my point, even 50, right, I think they are really putting a damper on employment, which is going to stunt growth and cause setbacks for companies because they don't want to be spending as much because everything because rates are becoming so high, right? The price of everything is getting so high to get loans for companies and everything like that to start other projects, whatever the case is, new hires, whatever the case is, whatever they need to do. So being said, I think we could be close to a bottom. I'm not one to call a bottom at all. I'm very much a perma bull, but lately I've been very much bearish just on the current setup. I don't like the indicators I'm seeing with the dollar continue to skyrocket and the rest of the currencies falling. And then again, you have oil, which I think could have another strong push. And you have worries and concerns about what's going on in Europe and where they're currently sitting and dealing and how they're essentially trying to get oil because of Russia. And essentially that's set up with ECB and what they're doing over there. So again, it's interesting. We are seeing relief. But we also have to remember we tapped into reserves and all that stuff a while back, right? Now you have to, a lot of things that we do have a delayed reaction. And so tapping into that reserve, maybe this is a relief bounce and right after earnings, we're going to get some bad data and a big rate raise and then maybe continue to maybe get one more solid flush and then go from that point. But we have to see. Again, the stock markets will start breaking away even from the economy. I mean, the stock market still push up, even if the economy is in recession. It's just more so kind of navigating through the junk right now. As soon as the Fed start dialing back, will be the time I think the market's really going to start rocketing from that point. And it's trying to just really determine, and that's all depending on as soon as the Fed start dialing back. So I think if they come in on a 50-point basis move, we could get a little bit of a rally, but still understand that's going to put us in a recession. And then if 75 or 100 points, right, I think that's going to kind of scare the market. It's almost the most definite recession. And then and see what happens from that point. So again, we are in earnings mode, so keep that in mind. We could potentially start really running here tomorrow and into next week, and potentially the week after that, to try to get some kind of pre-earnings run, and then trying to cushion the blow again going into the meeting. Let's look at Bitcoin. Bitcoin again is at 21. Everything pumps today. Everything's running in parallel right now. The bad thing about this with Bitcoin, you're looking on the weekly, right? We had that break. We didn't really have a true retest. It looks like we're trying to retest. Again, everything could potentially try to be setting up for that retest and start falling from that point. So we definitely have to see. Currently, the new floor here is currently sitting around roughly around that 18,700 roughly. So it'd be interesting to see. I really think as far as Bitcoin and crypto, I really don't have much to say on it just because of the fact that it's you kind of know where I stand. I think after this recession, it's going to accelerate crypto in itself. It's just being patient and waiting for that time, and not trying to call every pump as being a reversal. You definitely don't want to be calling every pump as a reversal. You need it to have multiple days running without data hitting it and selling off like crazy. So we were really trying to see with Bitcoin, but I think we're definitely close, and definitely have to see if we can break above all this later on. Again, we are coming into a trend line too, so you have to keep that in mind. Again, you got some space, just like on the SPX, like I said, could potentially see back up to 24. You do have that 20 EMA daily. You had a break and not really a clean retest. We could be getting close to that clean retest before we start selling off again. Again, once we are officially in a recession, that might scare people. So just be mindful of that. People, again, this is all coming down to the consumer and how they feel about if they want to be spending their money right now. Tesla in a really good spot here. It's really winding tight. If we do break out tomorrow, if we can keep above that 742 tomorrow, or potentially around there, really I'd like it around 760. If we can break above 760. Actually, probably about 780. You got some nice gaps up, so you could potentially get tomorrow. But ultimately, to get like a full reversal on Tesla, you need a solid breaker above 780, and then potentially start heading back up. Again, there's a lot of resistance and a lot of big resistance here. You're talking about weekly and monthly supports up here, and we never really truly tested that 50 down here on the monthly after the break. We've really been holding tight against that 20. Which could be concerning. It really just depends on how we do it. Maybe this is the earnings that sinks it back down to 500. Maybe this is the earnings that pushes everything back up. But we really have to see how that is. Again, we're winding tight in here. We could end up coming back down to the 671 before the breakout. But really watching this closely to see what happens with that. And then Google's had a massive couple days. It's really kind of played off that trend. Again, it has a split coming up. Could be why. If this thing does pop back over, essentially the 2400, this thing could really start ripping back up. Again, you got the 200 sitting around the 500. I mean, you could get almost 100-point gain here if this thing really starts to rip tomorrow. And again, I think it could be the split that could be potentially running this. Amazon has been really good. It looks like we're getting a breakout here. As long as it can continue to hold above the 1500 and get a solid push up to the 120, and potentially the 128. Again, it really needs to break 128, and you got a gap fill up to 138. Again, I don't really see this all happening tomorrow. I could potentially see some pushing and then some selling off into the weekend just because of the uncertainty. But it really just depends. Again, this is a very bullish week. Normally, and next week is also a very bullish week. Typically, some of the two of the biggest bullish weeks normally in a year are these 2 weeks, the first 2 weeks in July, and then from that point, we will see. And again, we have a lot of data, a lot of information coming in the back end of the month, so I have to be mindful of that. So Amazon there. Let's see. We'll take a look at BA real quick. BA is still holding. It's good. It still needs to break above the 143 for value to really break out. Airbnb, again, for value, I'm really watching this descending wedge here. I really want to see this thing break and start heading up. So I'm really kind of keeping an eye on this thing for the daily to break above. Again, once this thing starts reversing and ripping, this thing can really start ripping, especially if the market as a whole starts to push. Airbnb, I think it's going to be a front runner for value, so I want to keep that on watch. JPM, again, the banks have been really holding, and I think we have to get our first bank earnings before the markets are really ready to start heading back up. And so JPM, again, next week. I'm not sure when exactly we got here. I think it's on the 14th or 15th. You gotta love TOS. Nonetheless, it's on the 14th, so I think that's next Tuesday. So being said, you got JPM, you got Goldman Sachs. They might be waiting. As soon as we get one earnings, I think that will start pushing the market one way or another. Goldman Sachs, all kind of just set up, just waiting for next week. And I think that's why, even though the tech was doing very well today, we didn't get a lot of gas to the upside because we were waiting to see what's going on in the banks. The banks start getting gas, you're going to see a massive rally on the index. And so I was kind of expecting that today. We started to kind of rally in the banks, and then the banks just kind of died off and still holding range. So that's what I'm kind of looking for tomorrow. Those couple of things. I really don't want to share a lot of. This year hasn't been really one for a lot of stock pickers, different stocks. I think if you're jumping around right now, that's a problem. And trying to focus just on a few and survive what is currently going on, and accumulating if you're investing, whatever the case is. But just being patient while this market kind of plays itself out and go from there. But that's pretty much what I got. So tomorrow's pretty easy. That report's going to come out before the bell, and then we'll know direction tomorrow. And even if we do start selling to the downside a little bit, I think we can hold, watching those bottom ranges and seeing, or maybe we break out and Tesla could be a front runner, maybe Airbnb, BA could be front runners. If we get the banks on the side of the index and start pushing up, that will provide the gas to get us all going. So with that being said, remember to drop a like button. Until next time, I'll see you guys later.